Welcome to Retire Hustler. This is the second video of my 100k profit in 12 months with options trading series. As you can see, it was an amazing week. I closed the week with over 12,000 profit, and Amazon options were the biggest driver of this week's profit. I even put my Amazon t-shirt today to show my gratitude. Anyway, for those of you who is watching me for the first time, I'm uploading a weekly update videos every weekend where I'm showing my previous week close trades and what went well and what didn't. Also, I'm sharing what is my newly opened trades and what I'm going to focus on the next trading week. Of course, while showing those, I'm also sharing my thought process, why I choose that strike prices, expiration dates, or entry and exit points. Like I mentioned in my previous video, I'm trading very conservatively. I'm not after speculative stocks or 0 to 1 day expirations. Most of the time, I'm getting 50% profit and exiting the trade within the first week, not chasing higher and higher profits. I just want to earn safe and consistent profits each week in order to grow my portfolio. If this sounds relatable to you, consider subscribing to my channel and follow my 100k profit journey. Of course, anything here is not a financial advice. I'm just sharing my experience on my retiring early journey. Please do your own risk assessments before investing money into the stock market. All right, being said that, let's dive into the dashboard. Here's the dashboard. As you can see, I closed 79 trades in total. We are in day 92, just past the 3 months mark in 12 months goal. I reached almost 20% of the goal, by the way, with a total 19,000 profit. As you know, this week, many companies had earning call. It was amazing, profitable week for me, to be honest. I closed 23 trades this week with a profit of over $12,000. I mean, what a week. Everything went well in the way I imagined, so I'm very glad with the results. I'm also excited for next week's since I moved those profits into other good opportunities. I hope November will be somewhere around 5 to 10,000 profit here so I can fix this unbalanced monthly chart. Anyway, joke aside, let's not waste more time. We have so much to cover, and let me show you the details of that 23 trades. We are clicking here to 23 number and it will be updated on my closed trades. Here they are. As you can see, I closed 13 Amazon options. That was my main source of profit this week. 11k came from only Amazon options, mainly LIPS options. But before going Amazon, I want to cover first other trades. Here I had, I think, 5 call credit spread and 4 put credit spread. Let's start with call credit spreads. For example, McDonald's, Pepsi, ExxonMobil, all these 3 opened last week. And I mentioned them in previous week video that I will try to close them the following week. And that happened. Well, actually they close automatically with profit taker, 50% profit taker. Let's check, for example, ExxonMobil first. I open ExxonMobil on 24 and close 31st. 24, it was right here, went above the Bollinger Band, and RSI was moving to 80 levels, and I opened 4 contracts with 35 days expiration. My strike price is over here. 122 I sold the call option and I buy 126 the call option to make this call credit spread. I will show quickly in the broker page how the credit spreads works for those of you who are not familiar much. Here the option chain. I'm going to 28 November expiration in ExxonMobil stock, and I will construct the same call credit spread with same strike prices. So left side of the option chain is for call options, and the right side of the chain is for put options. Since we want to make a call credit spread, we are going to use this section. So what we are doing in call credit spread is basically first we are buying a call option. It was 126, and the value for this call option is 21 cents. We are paying a debit in capital for this side of the option. Then we are selling a call option here, and it was 122 strike price. Since the short call of option is closer to the current stock price, it is more expensive. And at the end, giving 21 cents for buying and getting 42 cents from selling the option makes this trade, this credit spread, total 21 cents. So by submitting this call spread, you are going to get 21 cents. Since each contract represents 100 shares, you are actually going to get $21 credit. In my case, this exact credit spread gave me 47 cents when I submit the trade on 24th of October. And by 31st of October, on Friday, the credit spread lose value because stock price went down and strike prices of our call credit spreads went far from the current strike price. And once they go far from current stock price, they lose value since the possibility is going down. And I close it when the value goes to $24, I think. Yeah, $24. So I paid $24 to close it. And in the beginning, I had taken $47. So at the end, I pocket $23 profit from one contract. Since I had 4 of them, I end up $85 profit after the fees. So this is how credit spreads works in general. I will make more detailed videos to cover what each section does in the option chain here, like delta, like expiration days, but that was a quick introduction for now for the spreads. So let's continue now with our closed trades. My next call credit spread, which I closed this week, was McDonald's. I entered to the trade here on 20 October. Let's check the graph. I entered right here on 20 October. It was almost touching to the upper band and RSI was above 80. I opened 2 contracts and got 105 credit from each, and on 31st of October, I think right here, stock went down all the way here and my 50% profit taker triggered and I exit from trade 0.54 and profit was $98. Let me show the PepsiCo credit spread. I entered trade here on 20 October. RSI was again above even 90 this time and it was touching to the upper band, and I think I exit on 28 right here, and I think 0.57, yeah, like my 50% profit taker triggered and closed the trade automatically with a profit of $112. Let's check some of the put credit spreads. I had JP Morgan, for example. I opened it on 14 October. I think it was 14 October. It was right here. RSI is around 20 level and stock passed the lower band. So I saw an entry point and I construct my credit spreads right here on a support point. It was even a support point in the past. So on 28th of October, it was right here. Stock went up and I automatically got 50% profit and exit from trade. Lastly, I had also put credit spreads in Uber here. I entered to this trade on 14 with a 35 days expiration again. Let's see the graph quickly. On 14, stock price was over here, again past the Bollinger Band, and RSI indicator was below 20, and that was my entry decision. And after 10 days, here on 28th of October, I exit from trade again with a 50% profit taker. My strike price for short put was again in a support level from the previous months. As you can see, I have a really structured formula to decide my entry points and exit points. I'm choosing my strike prices and entry prices accordingly. I'm checking multiple indicators, and most of the time I open trades only when they have certain setups, like I mentioned. RSI, 200 moving day average, Bollinger Bands, and I'm not chasing much profits and exiting automatically at 50%. So overall, that's my credit spreads actions. I'm not going through every single one, but feel free to slow or stop the video and check my entry exit days and strike prices from this table. So let's jump into Amazon craziness on this earning week. Like I mentioned, I closed 13 trades and in total got 11,000 profit. Half of the profit was from 2 leaves options here, and remaining was from cash secured puts and credit spreads. I'm not going to go much detail on credit spreads, but I basically buy whenever I saw a dip in the past month. For example, I opened one on 15 October. I think it was this one, 15 October and 24 September. Let's check them quickly. I'm opening Amazon chart. On 24 September, it was here, touching to the lower band, and RSI was around 20s. It was a big red rally. On 15 October, it was right here. It went again down on RSI and Bollinger Band, plus it went even down from 200-day moving average. On the same day, when it moved from 200-day moving average, I went and I opened a cash secured put here with a strike price of 215, and I get a premium of $12 because it was right here on the money, and my expiration for that was almost 2 months in the future. Yeah, it was December 19. And I really got a nice profit from that. On 28 October, I opened more cash secured puts right here. I know indicators wasn't the great on that day, right here, but premiums were very juicy due to the earning call in a few days. I put strike prices for those, I think 210 and 215. They were right here, both below the 200 moving day average, and the expirations were not just after the earning. So I think it was December and November. So I gave some time to stock bounce back above 200 moving day average in case of a big drop after earnings. On the other hand, I had also covered calls on Amazon. I want to play for the downside movement. So I went and sold some covered calls on three levels, 242, 247, and 252. I collected 400 premium for those, and stock went like 12% up after earnings. Then it closed right here at 244. So my 100 shares are sold at 242. On Monday, my plan is with that cash, I'm going to sell some cash good puts around its 240 levels. I believe it will be a nice premium since it is close to the current price. And on top of premium, I'm also aiming stock appreciation since I'm buying the stocks back below my sale price in case of put option assignment. Okay, lastly, let's cover the LEAPS option, the big winners. So I opened two LEAPS options. For those of you who doesn't know what are the LEAPS options, they are basically long call options with more than 1 year expirations. So on 1st of October, I opened the first LEAPS here when the stock was 1st of October, when the stock was trading at 20 RSI levels and lower in the Bollinger Band. I choose expiration date as 2026 September for this, and strike price was 175 right here, and I paid 61, which is $6,100. What LEAPS contract does actually, it acts as 100 synthetic shares, but in a much lower price. Instead of paying $20,000 for Amazon shares, I only paid 6,000, and I got a chance to control 100 shares of stock. And once stock price went up from 220 levels to 240 levels, which is 20 points difference after earning, I profit around $2,000 for my one LEAPS option, which controls 100 shares. That's why 20 points difference was kind of equivalence of $2,000 profit. And I went and opened two more LEAPS options on 21st of October. On 21st of October, it should be right around here. RSI was still low, and I was believing the earning is going to be positive. So my put strike was even lower here, 165, and expiration is further on 2026 December. And I paid around 7,000 for each contract. After stock price move around, as I mentioned, 20 points, I profit from 200 synthetic stocks around $4,000. Even after earnings, if stock had gone down, I would have time to profit for another year. I wouldn't mind to hold 100 synthetic Amazon shares because I have a huge belief on the company. I really like LEAPS option strategy, by the way. I will make a separate video around this. How the over 1 year future long calls work, how they can be used as synthetic shares for those of you who don't have much experience in LEAPS options. So let's wrap up the closed trades and profits here. And let's check quickly what new options I opened this week and what's my plan and strategy for the upcoming week. Let's generate our open trades tabs with our Google Sheet extension here. here I open 12 new option trades, I think 11 options trade. You will see more LEAPS options here. I used the previous week's crazy profit on buying more LEAPS options on Friday. And I mentioned it was the earning week and some of the great companies went down quite a bit. And I want to take this opportunity since I believe their fundamentals and their products and their future results. So the LEAPS options I bought were MasterCard, Meta, and Walmart. Let's check quickly Meta. As you can see, after earning, Meta dropped 10% almost after missing the estimates on earning call. But in reality, they got one-time 15 billion tax-related hit in US. That alone caused their earnings stay under the expectation. But if you exclude that, they increase their earnings in all their business segments, they increase their revenues, and they're still a great player on the AI market. Since I believe their fundamentals and their products, I went and I bought this long-term call option with a strike price 540 right here, and expiration was 227 here. I trust the company. In short term, if the stock price doesn't go up from the current place, it is fine. I can hold my LEAPS option. Like I said, I have the trust to the company. I believe it will stay above 540 level by the time of expiration, which is 2027. But my hope, of course, for the stock goes up at least to this 100 moving day average levels, like 730s, which is around 60 to 70 points up from the current drop. So in that points, my 100 synthetic calls will bring me around somewhere $6,000 profit. So that's my goal with this trade in short term. Other LEAPS options were also similar, MasterCard and Walmart. Let's check them also. Walmart I opened on 31st of October with the profit I got in Amazon on Friday morning. So in Walmart, I saw the opportunity in Walmart. It was touching here 100-day moving average. When I go to the past, I saw 100-day moving average is a strong support level over and over and over again. And you can see here and here and here as well. So I went and buy two 2027 long call option, and my strike price is well below the current stock price. It was right here on 85 level. Again, my goal is collecting a nice premium on the way back to the above. I will have more than 1 year for that. MasterCard was similar. I opened a trade on 30 October. Let's check the MasterCard. This time I saw stock went below the 200 moving day average, and in the past again it shows a strong support point, and RSI was down, so I wanted to use this opportunity to buy this long call option, and I'm going to follow this also in the following weeks. Other than LEAPS options, I enter for the same company's put credit spreads because I really like taking the opportunity on put credit spreads when I see a great company went down substantially from 100, 200-day moving averages. So I went and opened two put credit spreads in Meta and MasterCard and Walmart, and I went December expiration dates in all of them, 45 days in the future, and my strike prices are well below the 200-day moving averages. Also, this week, I'm closely watching Netflix. I mean, the stock. Well, also, I'm watching the platform, but that's not our topic here. So I opened two put credit spreads in Netflix. It is also one of the companies which got hit after earning due to a single issue in, I think, Brazil. I think investors are overreacting. Fundamentals are there, I think, for this company. They are increasing their subscriptions. There are news about the acquisitions of Warner Bros. And they might get the Harry Potter and DC rights. Numbers are there. So it's a very strong company. And on top of all that, there is a split in the company coming. Right here on 17 November, company will be splitting to 100. Historically, market is reacting splits in a very positive way. Stock is very pricey right now, it's above 1000 levels, and it will go down after the split to 100 levels, and more people will be able to trade with it. So I'm very bullish with Netflix for the November. Therefore, I want to buy some Leaps option this week, but it's very expensive due to the stock price. Leaps options in Netflix around 30K. So my plan is, since I just got a sign on Amazon covered call, my 100 shares will be sold on Monday. So I'm thinking to buy some Netflix Leaps option on Monday with that capital. Because I was going to use that money for cash secured put options for Amazon, but I'm planning to put the expiration dates for those cash secured puts for mid-December, which means until mid-December, my capital is not going to be used. So meanwhile, I can use that cash for buying for long call options, I mean Leaps options on Monday for Netflix. So that's my plan for Netflix for upcoming week. Let's wrap this video here. That's pretty much my next week plan. Checking my Leaps options and put credit spreads on these names. Just as a reminder, this is not a financial advice. I'm just sharing my journey with you. Please do your own research before investing any money to the stock market. Hope you enjoyed the video, and let me know in the comments if you have any questions and feedbacks. If you find also any value from this video, I would appreciate for your likes and comments to the video. Good luck everyone. See you next week.